Hey everyone, I wanted to talk about a blockchain that I was interested in creating a position in for this cycle. It will be a spot position, so more of an investment for this cycle rather than just a trade, although it is something that I'll be monitoring throughout this next 12 months. But it is Near Protocol. Now, I consider Near Protocol a competitor to Solana, and both were born out of a desire to address the limitations of Ethereum, the leading smart contract enabled blockchain, which has been grappling with issues of network congestion, slow transaction speeds, and high fees. For comparison purposes, Solana was founded in 2017 by Solana Labs and maintained by the Solana Foundation. It's a public blockchain network with smart contract functionality, and it boasts incredible high transaction throughput without the use of a layer 2 scaling solution like Ethereum relies on. Until February of 2022, it held the title of the fastest blockchain network in the world, and it uses a hybrid proof of history and proof of stake consensus mechanism with its native SOL token playing a crucial role in securing the network. Furthermore, Solana is buzzing with developer activity and has a vibrant community of developers constantly innovating and pushing the boundaries of what is possible for the platform. On the other hand, Near Protocol, founded by Alex Gidanov and Ilya Polosukin, is a smart contract-enabled blockchain and data storage network. It serves as a community-operated cloud infrastructure for hosting decentralized applications, enabling developers to build and deploy smart contracts quickly and securely with minimal costs. The native Near token is essential for securing the network via the Near Protocol proof-of-stake consensus mechanism, and Near uses a process called sharding to address the issue of scaling public blockchain networks. Recently, Near Protocol has made headlines by partnering with Alibaba, which is a move that signals significant institutional adoption and trust in the platform. Now, Solana has innovative components like Sea Level, which is the world's first parallel smart contract runtime, and Gulfstream, the transaction forwarding protocol aimed to scale without using layer 2 networks. Near Protocol, however, has its human readable addresses, which I can't tell you how important that is, and Ethereum bridge called Rainbow Bridge, which is designed to provide a user friendly and seamless experience, which you cannot put a price on. Both the Sol token and the Near token play pivotal roles in securing their respective network via proof of stake consensus. Both tokens also grant holders governance rights, allowing them to vote on proposals to make changes to each respective network. However, Near token has an additional use case, which is paying for data storage. Despite Solana's edge over Near Protocol in terms of users, token performance, and adoption, Solana users have experienced several outages and disruptions to the network in recent months. If these issues aren't addressed, they could spell trouble for Solana, but I foresee them getting through that. But with Near Protocol, with its recent partnership with Alibaba and a successful implementation of sharding and infrastructure, it so far has managed to avoid such outages. Now, it's also might be because of its adoption rate and its congestion level, but this stability, coupled with the significant partnership, could potentially give Near an edge in the long run, especially with its lower market cap. So, which blockchain comes out on top, Solana or Near? Well, both blockchains are highly scalable with a low carbon footprint. Each network features an Ethereum bridge and is compatible with the Ethereum virtual machine. Solana does have the more established network of the two, with a more active developer community, which is very important. But Near has an advantage of a significant partnership and a track record of stability. So, as an investor and a trader, I'm always looking for the best risk reward ratio. And when I look on the leaderboard, Solana comes in at 5 and a market cap of $74.8 billion. And Near comes in at number 19 with a market cap of about $8.4 billion. Now, there isn't really a direct comparison other than they're both layer ones, but Near has a narrative, which is the AI narrative, which is very in vogue at the moment. So I'm not saying don't invest in Solana versus Near. That's not what I'm saying at all. What I'm saying is, and you may want to invest in Near as a way to improve the alpha of your portfolio. The other thing to consider is the inflation rate of the tokens. So Near Protocol has a 5% fixed annual inflation rate minus transaction fees, and the protocol supply is not capped. New coins are issued at a rate of about 5% a year. However, the protocol also has a burning mechanism that removes 70% of transaction fees from the circulating supply, making the network more disinflationary as usage increases. If the number of daily transactions surpasses about 1.5 billion, Near could become a deflationary token. As of April 26, 2024, Solana's inflation rate was expected to decline by 15% annually until it reaches a steady state of 1.5%. Solana's inflation rate was initially set at 8% in February of 2021 and is distributed through staking rewards. The current estimated reward rate of Solana is 5.46%, which means that stakers of Solana are earning about 5.46% if they hold an asset for 365 days or more. So when it comes to inflation, I don't think one really beats the other. However, I do think Solana has an edge when it comes to staking, which is a huge incentive to get that extra income. Now, taking a look at Near's price, it currently stands at $7.90. And since the beginning of the bull run to its peak, it's gone up about eightfold. Now, in comparison, Sol is at $168. However, since the bull run, it has gone up tenfold, which is pretty significant. So, Sol is the stronger of these two coins, but you have to remember that the market cap of Solana is at $75 billion, where Near is at 8.2 or $8.5 billion. So I can see Solana doing at least a 4x from here at the peak of the Bitcoin cycle. However, there is more upside in my mind for Near as long as it gets the adoption based off its lower market cap. Now, as far as the technical analysis part of this video, we are currently on the daily. And I'm going to put my support and demand zones here, as well as a fib chart. And we are currently in an ascending wedge. So that is important to note. Now, again, this is just a pattern. It doesn't mean that we're going to hit this target, but it does mean that there is a higher chance for this pattern to break to the downside than to the upside. And we have gone up quite a ways from the bottom of this current trend. So we started out at $4.2, $4.3 and went up to a height of $8.5. So knowing that there is potentially going to be a break to the downside, again, this is not saying that we're going to be bearish for the rest of this cycle. It just means that I would like to get in at a better price. So looking at my supply and demand zones in relation to the fib chart, in an uptrend, I would expect to come down to at least the 0.382. So I'd look to get a portion at around $7.10. And not only that, but it is in relation with a demand zone. So we could come all the way down to 0.5 on the Fibonacci chart, which is about 6.7. So I'm going to set some limits or limit orders at around $7 to $6.7 in hopes to get that better price. Now, to add a reality check to how price action might go from here, I did place the simple moving averages here. So the one great thing about Near is that it has done a lot better than the other altcoins during this current downtrend. Anytime we've had a hit on Bitcoin's price to the downside, alts usually go down a lot more. However, Near has been excellent in this fact. And the way that we know that is by comparing the simple moving averages on the daily between different alts. Now, Near is above all of its simple moving averages, above its 20, 50, 100, and 200. But just to keep things in perspective, it has touched the 100-day moving average. And as far as getting a price between the 0.382 and 0.5, price could come down to the golden pocket, which is probably the best place to pick up a coin as far as a retracement, and it is in confluence with the 100-day moving average. And that's really only if we break this area of demand, but I will have a limit order down here. So if you can't tell, the best way to get into a position is by dollar cost averaging and setting limit orders at areas of confluence with a retracement and demand zones. Taking a look at our oscillators, you can see I have my market cipher indicator up, and we did have momentum to the upside after we did have a dip in money flow. And you can see here we had a huge money flow just prior to that, and that was reflected in the eightfold increase in price. We had some consolidation. It did fairly well, although it was red. and we have now flipped green again, which is a good sign. So we are on the downward momentum side of this current wave, so we could have price consolidate or move down a little bit, but having that money flow is a positive sign. Taking a look at our traditional oscillators, we have our RSI, MFI, and our stochastic RSI. We are above 50 on all of them except for the stochastic, but it looks like it is looking to converge, but momentum is on the downward side, suggesting consolidation in the price. And then looking at our MACD, you can see that we are about to diverge, and that could show we are continuing to consolidate in price as well when you add up all of these oscillators together. So that could be an issue. However, what could happen is we cross, consolidate, and then that momentum diverges again and we continue up in price. Taking a look at the 4 hour, you can see that we do have a triangle pattern which suggests price action to the downside, but I would say that that actually played out when it came down to about $7.33. So I don't think this pattern is as strong as it suggests, and price action has been consolidating around a point of control at around $7.98. And we are in an area of supply. So the thing that we're going to be hoping for is that we make this a demand zone. And I also have the exponential moving averages as well, and we are above all those on the 4 hour. Taking a look at the 1 hour, you can see that I have the Ichimoku indicator on here, and the lagging span is now free and clear of the price action, which is bullish. We also have penetrated the cloud to the upside, and what I would expect here is we continue to the upside into this supply zone, and depending on where we top out, I would expect us to retrace and hit this point of control as resistance, or even the cloud down here, that would still be bullish. And we can place our fib chart here. Now we don't know where the top of this trend is, but as of right now, it's setting about $8.02. So a retracement to potentially even the 0.382 at this point wouldn't be out of the realm of reality. But so far, this looks like bullish reversal, and we'll just keep an eye on it. So this is my analysis of NieR. I hope you enjoyed it. If you have any questions, please let me know. And if there's any ways I can improve, let me know as well. Please hit that like and subscribe button, and I'll be looking forward to looking at some other charts and other coins that will provide us the best alpha for this cycle. All right, thanks. Bye.